Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by MENA, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Azmarq or Chainlink, MENA puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let MENA do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, MENA offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the MENA app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit AMT.t, that's AMT.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to The Deep Dive. Today, while we're cutting through the noise, we want to bring you the most critical insights from what's happening across crypto, digital asset strategies, and some pretty groundbreaking AI innovations, especially out of the Middle East. We've got a whole stack of sources, market reports, geopolitical takes, tech announcements, all dated today, September 9th, 2025. Okay, let's unpack this. Our mission is simple: give you a shortcut to being genuinely well-informed. Expect some surprising facts, maybe some unexpected connections.
And what's particularly compelling, I think, is how these things that seem separate, crypto prices, AI, and the Gulf, they're actually deeply interconnected. It really reflects this dynamic global landscape where tech and finance are just constantly reshaping each other.
Absolutely.
We'll touch on, some surprising Bitcoin trends, these bold new digital asset plays, and how different regions are really pushing for AI leadership. It's a complex stuff.
It is. So let's jump straight into the global cryptocurrency market. Now, at first glance, it looks kind of steady, right? Bitcoin prices mostly stable over the last 24 hours. But here's where it gets really interesting. If you dig a little deeper, the stablecoin volume, it's just gone off the charts, exploded.
Off charts.
Yeah. And we're also seeing significant inflows back into Bitcoin and Ethereum ETFs. Together, they pulled in over $1 billion just yesterday.
$1 billion. Wow.
Yep. To break it down, Bitcoin ETFs saw about $637.4 million in inflows, and Ethereum ETFs added another $403.4 million. This is pretty notable, especially after we saw some outflows from Bitcoin ETFs recently. It's a real turnaround.
Okay.
And overall, the global crypto market volume almost doubled in 24 hours.
Yeah.
It hit like $143 billion. Market cap now sitting at $3.96 trillion. That's up nearly 1%. So this massive stablecoin activity, the renewed ETF interest. What's the underlying story here? What's the sentiment?
That's a great question to kick things off. If we connect this to the bigger picture, that stablecoin surge isn't just volume for volume's sake. It's a key liquidity indicator. It suggests capital is moving around, maybe positioning for new plays. And those ETF inflows. That's a pretty clear signal that investor confidence is picking up again.
Right.
Especially confidence in Bitcoin and Ethereum as increasingly accepted digital assets. And this isn't happening in a bubble. It actually lines up with some recent macro data from the U.S.
The economic indicators.
Exactly. The Bureau of Labor Statistics, the BLS, just put out their employment figures. Unemployment rate, pretty much unchanged. But there was a slight improvement in overall employment. Now, why this BLS data matters is crucial. Fed Chair Jerome Powell. He'll be looking very closely at this, along with inflation data coming September 11th and tariffs for his interest rate decision on September 17th. And based on these job numbers, the U.S. economy actually looks quite robust right now.
Okay, so the macro environment seems somewhat supportive, or at least stable.
Exactly. And beyond Bitcoin and Ethereum, decentralized exchanges, DUXs are buzzing. We saw $14.77 billion in 24-hour volume, generating nearly $75 million in fees. And the total value locked in DeFi, all the assets locked up in these protocols, is substantial, $153.87 billion. DXs make up a big chunk of that, about 42.74%.
And are we seeing any specific trends within DeFi?
Definitely. What's really notable is the surge in demand for real-world assets, RWAs, in DeFi.
Tokenizing real-world stuff.
Precisely. Things like tokenized property, commodities, even invoices, bringing tangible off-chain value onto the blockchain. The TVL for RWAs just crossed $15 billion, $15.3 billion specifically.
That's significant growth.
It is. And in terms of specific DXs, Uniswap is still leading the pack with $3.43 billion in volume, followed by PancakeSwap at $2.21 billion and Meteora around $818 million.
Okay.
And an interesting little side note, while Bitcoin's dominance is holding strong at 56.2%, Ethereum's share dipped slightly to 13.10%.
Which could mean?
Often suggests increased altcoin activity, broadening interest beyond the top two.
Right, that makes sense. The ecosystem is definitely diversifying. But let's talk about a bit of a paradox now. Bitcoin's Google search volume in the U.S., it's actually hit an 11-month low.
Huh. That is interesting.
Yeah, on the surface you might think, that's bad news, but I wonder, could it actually be a positive sign? Maybe the market's just matured.
Matured how?
Like, general awareness is just so high now. Random people in the gym know about Bitcoin. They get the basic difference between fiat and Bitcoin. So maybe they're not constantly searching what is Bitcoin anymore.
That's one angle.
Or maybe it's just the rise of AI tools, people asking ChatGPT instead of Googling.
That's a very plausible factor, too.
Okay.
It certainly raises an important question about how we interpret search data now. A dip in Google searches doesn't necessarily mean less interest. It could be maturity, like you said, maybe more institutional focus rather than retail curiosity, or definitely that shift in how people find information.
Right.
But let's look at other indicators just to get a fuller picture. Take gold, for instance. It's pumped, 38% since the start of 2025?
Wow, 38%, the classic safety asset.
Exactly. Seen as a flight to safety amid all the macro uncertainty. And what's intriguing, something analysts often flag, is that historically, strong gold rallies sometimes precede major Bitcoin breakouts.
Is that a reliable pattern?
Well, it's a pattern that's been observed. And this, historically, about 18 months after a Bitcoin halving event, prices tend to, let's say, go berserk.
Right, the post-halving bull run theory.
And that 18-month mark from the last halving, it's expected around October.
This October.
This year. Okay.
Yeah.
So this combination of factors, gold's performance, the historical halving cycle, it's fueling some pretty serious speculation. We're talking potential Bitcoin prices of $200,000, maybe even $250,000 in the next cycle.
Okay, those are some very bold predictions. Significant shifts potentially ahead. And speaking of ambitious moves, let's pivot to Worldcoin. Huge news here. Acoin's Holdings just announced a massive $250 million private placement. Their goal, acquire Worldcoin as a primary reserve asset.
$250 million into Worldcoin.
Yes, plus another $20 million chipped in by BitMine. And the market reaction, instantaneous. Worldcoin's price jumped over 40% in 24 hours. Weekly gains over 50%.
Wow.
This whole thing is backed by some big names, too. Pantera Capital, Kraken, Brave Hoarder. What's really significant is that this is basically the first large-scale treasury strategy built around Worldcoin. And remember, Worldcoin has over 33.5 million verified users.
That's quite a statement.
It really is. This institutional embrace feels like a major step.
Absolutely. What's fascinating here is seeing this kind of major institutional backing. It shows a clear willingness and appetite to experiment with different crypto assets, looking beyond just Bitcoin and Ethereum.
I sense a but coming.
But yes, it's crucial. We approach this with a balanced view. We have to acknowledge the significant controversies and, frankly, the risks tied to Worldcoin. There's still many misconceptions, maybe some unnecessary security fears around the orb, that physical scanner for their digital ID.
Right, the eye scanning device.
Yeah. Now, Sam Altman and the founders, they claim it's secure, using zero-knowledge proofs to protect privacy.
Which is cutting-edge cryptography.
It is. But privacy concerns absolutely persist. Just look at the fines they faced in Germany, for example.
Okay.
And then there's the centralization risk. Compared to Bitcoin's decentralized nature, Worldcoin is still quite reliant on its founders and investors for development governance.
Makes sense. Less distributed control.
Exactly. And it's still relatively new. Its long-term value, its supply dynamics, they're just unproven at this stage. So look, maybe it's okay for a small experimental allocation in a portfolio focused on digital identity projects. But is it ready to be a main institutional reserve asset? It's just too early to say.
Right.
Bitcoin, with its neutrality, its incredible liquidity, its battle-tested history, it's still unmatched as that safer base layer for institutional treasuries.
That's a really important distinction, especially as more institutions dip their toes in. And this institutional interest, it naturally brings regulation and traditional finance frameworks into the conversation. On that note, Hashkey Group just launched a digital asset strategy. They've got a multi-currency fund, over $500 million.
Hashkey. Okay.
Their focus is specifically on the Bitcoin and Ethereum ecosystems, and their stated goal to, quote, standardize asset management and drive Web3 globally. How does a move like this bridge the gap with traditional finance?
If we connect this to that bigger picture we were talking about, Hashkey's approach, what they call their compliance-first approach, that's arguably the most crucial piece here.
Compliance first.
Yes. This isn't just throwing money at crypto. It's about professionalizing it, moving it away from that old Wild West image towards a more structured financial ecosystem. It means standard products, solid risk management, the kind of investor protections that, attract traditional money. It really lays the groundwork for integrating crypto into mainstream portfolios.
So it's a sign of the industry maturing.
A very strong indicator, yes. It emphasizes that playing by the rules, adhering to regulatory frameworks, is absolutely essential if this space wants to scale.
That compliance theme is definitely echoing. And we're seeing it play out practically in different markets. Take India, for example. Bybit, the exchange, they've just resumed all their crypto trading operations there.
Oh, they were suspended, weren't they?
They were, yeah. Back in January 2025, Indian authorities temporarily suspended their services. The issue was missing proper AML registration, anti-money laundering.
Right. The compliance piece again.
Exactly. So the resolution, Bybit paid a $1 million fine. They officially registered with India's Financial Intelligence Unit. And crucially, they implemented stricter KYC, Know Your Customer, and security protocols.
They jumped through the hoops.
They did. And it seems like a pretty significant step forward for access in the Indian market, right?
Oh, absolutely. What's fascinating here is the sheer strategic importance of India's market. We're talking potentially over $1.5 billion in value for crypto exchanges. Bybit successfully navigating this regulatory maze. It's more than just getting market access back. It basically demonstrates a viable path for other major exchanges.
A blueprint, almost.
Exactly, a blueprint for how to operate within these complex, sometimes shifting global regulatory landscapes. It shows that if you put the right measures in place, especially around AML and KYC, you can responsibly open up these huge, promising markets. It's a win-win, really.
Okay, so compliance is enabling access. Now, building on that theme of institutionalization and regulated access, here's something that really caught my eye on the ETF front. We might be seeing the first U.S. Chainlink spot ETF.
Chainlink. Interesting. Who's behind it?
Grayscale. They filed with the SEC to convert their existing Chainlink Trust ticker, GLNK, about $29 million AUM.
Okay.
And what makes this potentially even bigger is the possibility of including staking rewards within the ETF structure.
Staking rewards in an ETF. That would be novel.
Right. And this seems to be part of Grayscale's bigger strategy. They're looking at converting other crypto trusts too, Solana, Dogecoin, XRP into ETFs, offering regulated access, plus that potential staking income.
Makes sense from their perspective. Access plus yield.
Exactly. So why Chainlink? What makes it such a prime candidate for this kind of institutional product, maybe even before some others?
Yeah, this raises an important question. Why Chainlink? Why is it seen as such a, well, game changer for institutions, potentially justifying an ETF? It really boils down to its core technology. The Cross-Chain Interoperability Protocol, or CCIP.
CCIPA, right?
Think of CCIP as like the internet's TCP/IP, but for blockchains. It allows different separate blockchain networks to securely communicate and transfer data and value between each other. That used to be incredibly difficult, almost impossible securely.
So it connects the silos.
Precisely. And this isn't just theory, it's already having real-world impact. Get this, the U.S. Department of Commerce used Chainlink CCIP to post its Q2 GDP data onto 9 different blockchains simultaneously.
Wow, the government using it.
Yeah. And you've got major players like Ripple actively collaborating with Chainlink, too. So because it provides this foundational tech that connects this fragmented blockchain world, you could expect to see, well, quite a lot of partnerships and really innovative protocols built using Chainlink in the coming months, especially in that booming area of real-world asset tokenization we mentioned earlier.
Okay, that internet for blockchains analogy really clicks. It's about infrastructure.
Foundational infrastructure, yes.
Got it. Now let's pivot slightly from digital assets to the AI scene, which is absolutely thriving, particularly in the Middle East. Two key developments caught our attention. First, over in Dubai, a company called Azmarq Technology just launched Baynix.ai.
Baynix.ai, what is it?
It's an AI-powered omni-channel platform basically designed to revolutionize how businesses engage with their customers. It integrates things like WhatsApp, SMS, RCS messaging, offers AI analytics, compliance tools, all from one dashboard.
Okay, a unified customer engagement hub.
Exactly. And crucially for the region, it has full Arabic language support and integrates with local payment systems.
Localization is key there.
Definitely. And Azmarq isn't new. They've apparently helped over 700 businesses in India already. They see Dubai as that ideal hub for this kind of innovation.
Yeah, Dubai's pushing hard on tech.
They are.
And what's fascinating here with Baynix.ai is that it's not just another piece of tech. It strategically strengthens Dubai's position in digital innovation, specifically for the GCC region. By focusing on these really practical, localized applications, things that directly improve ROI, improve customer experience, it shows a really sophisticated effort to embed AI right into core business operations. It's about making AI useful, relevant, day-to-day.
Right. Practical application, not just hype. That focus seems smart. Okay, our second AI highlight takes us to Saudi Arabia. ALPTech has just expanded into Riyadh, partnering with AstroLabs, their stated aim to drive innovation in artificial intelligence.
ALPTech moving into KSA. That's interesting.
It is, especially considering Saudi Arabia's trajectory. The kingdom is rapidly climbing the global AI ranks. They're 14th globally, first in the Arab world according to the 2024 Global AI Index.
#1 in the Arab world, okay?
And get this, they're also now among the top 10 markets globally for AI talent density. This feels like a very deliberate and successful national strategy playing out.
Oh, absolutely. If you connect this to the bigger picture, KSA's got strong infrastructure, they're pouring investment into AI, and they have proactive regulatory initiatives. It's rapidly becoming a kind of global testbed for AI development and deployment.
So what role will ALPTech play there?
ALPTech's expansion seems designed to serve a pretty crucial niche. They provide specialized services, things like risk analytics, data strategy, AI transformation help, even climate intelligence linked to ESG.
ESG is huge now.
It is. And they're targeting banks, asset managers, family offices, big corporations. But it's not just about selling services. ALPTech says they're committed to a long-term local presence. They plan to collaborate with Saudi universities, mentoring and developing local AI talent. The goal seems to be enabling Saudi institutions to really leverage AI for better decisions, long-term value.
Building local capacity.
Exactly. It's a very strategic move, both for ALPTech and for the kingdom's ambition to be a regional and, frankly, global AI powerhouse.
Wow, what a journey we've taken today. Seriously. From those subtle shifts in crypto sentiment, the ETF inflows, the stablecoin boom, to these bold new digital asset strategies like Worldcoin Treasuries and Hashkey's fund, and then this incredible surge in AI innovation, especially seeing the focus in Dubai and Saudi Arabia.
It's a lot to track.
It really is. It's remarkable how quickly these markets adapt to opportunity, to regulation, and just how interconnected these worlds are becoming. Crypto, traditional finance, AI. They're not separate streams anymore.
Not at all.
So what does this all mean for you listening?
Well, staying informed about these interconnected trends, it isn't just about following headlines. It's really about understanding the fundamental forces shaping the future of finance, of technology, the whole global economic landscape. The pace is just incredible. It really is.
Yeah.
And maybe this raises an important question for you to think about after this. Given this complex mix, the shifting regulations, the accelerating institutional adoption, these tech breakthroughs, how might things like robust digital identity solutions, the kind Worldcoin aims for, or that widespread cross-chain interoperability that Chainlink offers, how might those fundamentally reshape national, even international digital economies in just the next, say, 12 to 24 months? What kind of unexpected partnerships could we see? Maybe government initiatives popping up? And how will these shifts impact the everyday digital lives of people and businesses? It's worth considering.
Absolutely. Something to think about as you go about your day. Thank you so much for joining us on this deep dive. We hope you feel more informed, maybe a little more intrigued, and we certainly invite you to continue your learning journey with us next time.